Greetings, everyone. The past couple of years has witnessed unprecedented changes and disruptions across the world, largely driven by the COVID-19 pandemic and further accentuated by a disrupted supply chain, manufacturing shutdowns, logistical disturbances, and liquidity crunch, among others. It was in the midst of all these that we decided to assess the pulse of the Indian automotive consumer through a detailed, widespread consumer survey. Our objective and intent was to make sure we got feedback from customers from every corner of the country. And in January 2021, we launched the Indian Automotive Consumer Canvas to study and understand how much has the pandemic altered consumer behavior or what has been the kind of impact on vehicle preferences. We got off to a great start, garnering over 202,000 responses in the first year. And this year, IACC has grown both in reach as well as stature. In just 8 days, we received over 2.56 lakh responses in 4 of our group platforms: CarTrade, Carwale, Bikewale, and of course, Mobility Outlook. We've received very interesting insights on what consumers are thinking about vehicle buying, both among four-wheelers as well as two-wheeler customers. The findings of the survey are now ready, corroborated by our validation partner, Frost and Sullivan, and we will shortly share the same with you. Ladies and gentlemen, thank you for joining us today in this second edition of the IACC panel discussion powered by Axis Bank. Welcome. It is indeed a great honor to have with us today some of the most sought-after captains of the Indian industry. Please join me in welcoming Mr. Shashank Srivastava, Senior Executive Director, Marketing and Sales, Maruti Suzuki India Limited, Mr. C.S. Vigneshwar, Secretary, Federation of Indian Automobile Dealers Association, Mr. Sumit Bali, Group Executive and Head, Retail Lending and Payments at Axis Bank, Mr. Kaushik Madhavan, Independent Consultant with Frost & Sullivan, and Mr. Banwari Sharma, CEO, Consumer Business, CarTrade Tech. At this stage, I would also like to remind all our attendees today that you can participate in this discussion and ask your questions by using the Q&A box at the bottom of your screen. I would now like to invite Mr. Kaushik Madhavan from Frost & Sullivan to share the highlights of the IACC 2022 findings. Kaushik, the virtual floor is all yours.
Thank you very much, Deepangshu. It's wonderful to be a part of this IACC panel. Distinguished speakers, it's always good to see industry veterans coming on board to share their insights. Thank you very much once again, Deepangshu and Mobility Outlook, for giving us the opportunity to be the validation partner as always. So without much ado, let me share my screen. Gentlemen, do let me know if my screen is visible. Is it coming up?
Yes, Kaushik, it is visible. You may proceed, please.
Excellent. Thank you very much. So once again, a very, very warm welcome to everybody who's joined this webinar. As Deepangshu mentioned earlier, the Indian automotive industry has witnessed some very, very positive movements over the past, let's say, 12 to 24 months. And we are here to share what the customers think, what the pulse of the customer or the buyer is. What are their preferences? What are they thinking when they are looking to buy a new vehicle, right? So some very, very interesting findings here. And let me quickly walk you through some of the key findings from this study. Now, looking at the objectives, the idea, again, to re-emphasize what Deepangshu mentioned, was to understand what the purchase behavior is going to be. Now that COVID-19 is part of our lives, we are learning to live with it. What is it likely to do in terms of our preferences and in perceptions? To assess some of the behavioral changes, like Deepangshu mentioned, we have done this over the past couple of years, and the idea also is to see how preferences have changed over the past 12 months. Are certain parameters more important today than ever before? Are people willing to spend more? The idea is to also look at what people are thinking in comparison to what the situation was 12 months ago. And needless to say, the overall objective is also to to understand future intent. What are people likely to do in the next 6 to 12 months in terms of their vehicle purchase preferences and intentions. So the target audience was a fairly good mix between different age groups. As you can see, we had about 5 age groups here. And in terms of demographics as well, we had a fairly good mix of male and female participants, respondents, spread across not only metros and tier 1s, but also tier 2 and tier 3 cities as well, because it's very important to understand what the upcountry customer is thinking, what the rural customer is thinking, right? And we also covered both two-wheelers and four-wheeler passenger car owners and intenders. Very, very happy to see that we had over 256,000 respondents. That's a significant jump in terms of the number of respondents compared to last year. Great positive trend here that we see people are more and more willing to share their ideas, to share their perceptions and share their intentions as well. So very, very happy to see that we had over 256,000 respondents this year. The methodology, very simple and straightforward. A link with the survey details, was made available on the web portal of the 4 platforms, which Deepangshu mentioned: Mobility Outlook, Carvale, Bikewale, and CarTrade. The link was open for 8 days, and we had the opportunity to collate all the responses, and make some meaningful analysis, and that is what we are going to share with you here today. To start with, the age profile. While on the one hand, we saw that close to 43% of the respondents were in the 18 to 25 year bracket. I mean, that is the target market we are looking at, right? Every OEM today, whether it is a passenger car OEM or a two-wheeler OEM, is looking to appeal to the younger generation, right? And it is very positive to see we had maximum number of respondents in this age group. But also very important is, close to 77%, more than 3/4 of the respondents were under 35 years. So this is the age group which is looking for new ways of ownership. They are open to new business models, and these owners, or let's say these intenders in this particular age group, are also looking for innovative ways of vehicle ownership, vehicle purchase experience, and disposing of as well. So great insight here there, to see a majority of the respondents were within the 18 to 35 years age group. Now, some of the key findings before we look at the findings in detail. 35% of the respondents indicated a willingness to purchase a two-wheeler electric vehicle. That's a fantastic number, right? 35%, almost 1 in 3 respondents are willing to evaluate an electric vehicle as an option when they are looking to purchase a new vehicle. Now, the need for vehicle has been more than ever before, right? Now that we are past the 3 weeks of COVID-19, life is slowly coming back to normal. People are beginning to travel again. There has been a bit of a balance between work from home and work from office, which means the need to commute has come up again. So the need for vehicles as well, right, has also increased significantly. 76% for two-wheelers and 69% for four-wheelers, right? That was the purchase intent. Now, what is also very important is people looking for new models of ownership, right? 26% of the respondents said open to explore innovative models like leasing, pre-owned vehicles, and subscription. So we're going to spend a minute or two when we come to that slide, but 26% is more than a quarter of the respondents saying they are open to new models. Very, very positive finding for us to talk about going forward. Budget, of course, something that has always been under discussion. 71% of the respondents said there has been a reduction in their budget by at least 10%, right? 18% said the budget reduction has been over 30%, but at least 10%, budget reduction has been reported by close to 3/4 of the respondents. Something to think about, how we can make vehicle ownership, vehicle purchase a little more attractive, a little more affordable for the buyers. Needless to say, charging infrastructure, or the lack of it, of course, is still one of the biggest reasons why people think twice before purchasing an electric vehicle. So there is some, a gap to be bridged here. Multiple things happening in this direction. We've got a combination of private players, aggregators coming in to install public charging infrastructure. We also have OEMs themselves investing significantly in public charging, fast charging infrastructure. Hopefully, this number will reduce in the next year's survey. But today, as we see the image around electric vehicles, the lack of charging infrastructure plays a very, very important role. Personal savings and liquidity is still something that is tapped into by the potential buyers, and something to talk about when we discuss avenues to finance new vehicle purchase, or maybe even pre-owned vehicle purchase. Something to talk about later. Now, let's dive a little deeper into some of the findings that I spoke about and see how it varies across different groups. Now, last year, just about half the respondents had said they intend to buy a new vehicle, but 69% of the respondents this year said they are having plans to purchase a four-wheeler, right? I wouldn't say completely post-COVID-19 yet, because we still haven't gotten into the post era, but COVID-19 is still with us, but we're learning to live with it now. Travel is slowly coming back to normal. That means the need to commute, like I said before, is coming back to normal as well. And that prompts the need for a vehicle. Now, similarly for two-wheelers as well, it's a bigger increase. 76% of the respondents said they have an intent to purchase a two-wheeler this year. Just 57% had said yes in 2021. So that's a big, big jump. Now, multiple reasons for that. On the one hand, we've got an increase in fleet operators. Last mile delivery is becoming really more important, with e-commerce growing significantly. With the manufacturing sector resuming operations, there is a need for even people to commute from point A to point B. And here is where the need for a two-wheeler becomes more and more important, both in metro tier 1 areas and also in upcountry and rural markets. So this is one of the biggest reasons why we see there is a positive intent towards purchasing a two-wheeler this year. Now, we asked, has your decision changed since the COVID-19 pandemic, right? Well, a significant percentage, 56% in four-wheelers, 63% in two-wheelers said their decision to change, their decision to purchase has changed, right? Slightly more than what we had reported last year, right? 50% for four-wheelers and 54% for two-wheelers. But again, the decision to change, the decision to purchase, right, whether it's a four-wheeler or a two-wheeler, has changed. Now, we also asked, did you postpone your decision, right? Here as well, we see an upward tick. That means 80% of the four-wheeler respondents said they postponed their decision. Again, similar number, 82% of two-wheeler owners or intenders said they have postponed. Now, what is the reason for this? The economic impact or the financial impact of COVID-19 is still there for everyone to see and witness, right? Now, that is one of the biggest reasons why we feel the decision to purchase a vehicle has been postponed. A lot of people are still struggling to find a balance between working from home and working from office. A lot of people have still seen significant pay cuts, although a majority of the manufacturing industry is coming back to normal. We do see a bit of a financial constraint pushing people's decision to buy a vehicle forward, right? That is again something we need to discuss, how we can make it a little more affordable, a little more attractive for people to buy and use a vehicle. Now, this is an interesting slide. As I said before, 41%, that's a very, very significant peak you see right in the middle of the chart, right? 41% of the respondents said that their budget has decreased by at least 10%. That was only 29% last year. So it's gone from 29% to 41%, which is a budget reduction of 10%. Now, If you look at the right side, 18% of the respondents said their budget has decreased by 30%. That was 28% last year. So that has come down. The reduction in budget by over 30%, right? This is a significant reduction. That share has reduced. That means people are willing to spend a little more this year. But the overall message is that still about 71% of the respondents have seen a budget reduction by at least 10%, 10% and more. Now, that is in line with the economic and financial impact that I spoke about a few minutes earlier that we have seen over the past 24 months. I believe that this is still going to continue for the next 12 to 24 months, the budget constraint, but we need to see how we can make some of the financial models that are available today. Not only the mainstream banking organizations, but also the NBFCs, so the smaller microfinance organizations, which are regional in nature. Some are, regional or zonal in nature. How can they play a role going forward in order to make vehicle purchase and ownership a little more affordable? Same thing for two-wheelers as well here. Close to 70%, similar findings as four-wheelers. 70% of the respondents voted for a budget reduction by at least 10%. Now, this is again an interesting thing. We wanted to understand what their perceptions are about buying an electric four-wheeler or an electric passenger car. No change actually. It was a little surprising for me. While on the one hand, we still have 33% of the respondents who say they are willing to buy an electric four-wheeler. What is a little disappointing for me is that I would have expected this number to go up in comparison to last year, because there has been a lot more media mentions about electric vehicles. There's a lot more marketing on electric vehicles by the OEMs. For some reason, that doesn't seem to have had a significant impact on people's perceptions, right? They are still more or less, evaluating other options. Only 1/3 say they are going to buy an electric four-wheeler. 1/3. Keep in mind, 1/3 is still a very, very significant number. Let's be very, very honest about that. But that doesn't seem to have changed significantly in the past 12 months. Slightly better in two-wheelers, electric two-wheelers. 40% this year said they are willing to buy an electric two-wheeler, up from about 37% last year. Now, a couple of reasons that we can think about. One is we have more and more mainstream players coming into the market. We've got the likes of Bajaj, TVS, Hero, who are beginning to offer electric two-wheelers. And on the other hand, new players, such as Ola, for example, right? And also some of the bespoke electric two-wheeler manufacturers, they are also starting to offer more and more products, right? So this buzz has actually helped moving this particular percentage upwards, right? So again, very, very positive for us to talk about in the near future. Again, interesting one. What has changed, that has prompted you to consider buying an EV? Now, in this, you can see that better product options, 60%, close to 60% of the respondents said that today there are better options, in terms of electric vehicles. That is one of the biggest reasons why we see people more inclined towards buying electric vehicles. What is also important is attractive technologies. Today, almost all the electric vehicles are connected. They have more or less the same performance, as a conventional vehicle. And they are a lot more attractive in terms of, the ride comfort, the performance, the dashboard with LCD screens, LED screens, and so on. So I think this is also driving people to consider electric vehicles. So here, again, two-wheelers, very similar responses, better product options. 64% said there are better product options. Additionally, what we also see as a reason for the inclination of customers to buy or consider electric two-wheelers and four-wheelers is new business models, right? Today, the OEMs are offering subscription services, short-term leasing, which are moving a little away from your traditional long-term purchase and ownership business model. So that flexibility is also making it a little more attractive for people to consider buying an electric vehicle, whether it is an electric four-wheeler or electric two-wheeler in the future. Reasons for not buying, no surprises here. 44% of the respondents said charging infrastructure concerns. I mean, that's one of the biggest reasons why people think twice before purchasing an EV. Which is, in fact, I was at webinars last year in New Delhi, where we had a lot of government representatives and the private sector participants talking about how they are making investments in building charging infrastructure. So very happy to see that in the next 12 to 24 months, we will see a lot more public charging infrastructure, public charging stations coming up. And with the state-owned oil companies playing a big role here, the likes of IOCL, BPCL, and HPCL, there is no doubt that the visibility of public charging stations will be a lot better as we go forward. I am personally very, very happy to see that range anxiety is not among the top 3 concerns. I mean, just imagine last year, or even let's say 2 years ago, if you ask a potential EV buyer, he or she would have said range anxiety is the biggest concern, right? But thankfully, if you look at this graph, it is not among the top 3. It still has a 60% voting from the respondents, but I'm happy to see that it is not among the top 3 concerns. So people are beginning to understand that for their daily usage, range anxiety is not really a challenge. And also coupled with the fact that the modern electric vehicles that are coming into the market have a significantly good range in comparison to, let's say, their IC engine counterparts. So it's clear that going forward, range anxiety is most probably not going to be a significant concern among the end consumers. Charging infrastructure, of course, is going to be not very different for electric two-wheelers here. What is very important is on the left side, right? Safety concerns is quite high for two-wheelers in comparison to four-wheelers. Obvious reasons, there have been many videos doing the rounds. We have seen media mentions as well of electric two-wheelers catching fire, right? Now, this has led to a bit of a bad taste, in people's, leading to safety concerns. Now, 2 ways of looking at it. One, there needs to be a better sense of responsibility from the manufacturers and the manufacturing ecosystem to say, the quality of products that we are going to offer are going to be on par with international standards. So you need to assure the customers that there are not going to be any safety related issues or mishaps going forward. That's number one. The second angle to it is to look at the supply chain and value chain, right? Where are we sourcing these components and aggregates from? Are the tier 2, tier 3 component and aggregate manufacturers following strict quality norms when manufacturing or sourcing the subcomponents from tier 2, tier 3 manufacturers? So we need to look at it from both angles, and that's the only way we can build confidence, among customers, and tell them, hey, you don't have to worry about fire hazards or the batteries catching fire. You have assurance from us that the product that you're going to get is going to be a top quality product. And we definitely need to address safety concerns. Another point to note here, again, on the left side, is that safety concerns was only 11% last year. It's almost doubled, right? So that is definitely something the EV ecosystem needs to take serious note of and look at improving product quality as a whole. Now, very positive, to see 26% of the respondents said they are willing to consider other, non-conventional vehicle purchase models, right? 20% of the respondents said they are willing to look at pre-owned vehicles. That was only 14% last year. That's a 50% jump from what we had last year. Very, very positive. Now, a couple of reasons for that. If you look at, the passenger cars, I know Shashank-san, you are here, I'm sure you've got great visibility on the waiting period, how that has evolved, without naming a particular brand or a particular model, a very close friend of mine booked an SUV which has made waves in the market in the recent times. He booked this particular vehicle in January 2022, right? 2 months ago. The estimated delivery of that vehicle given to him was August 2023. That is about 18, 19 months from the date of booking. So you can imagine the apprehension that people have in terms of dealing with such unreasonable long waiting periods, right? Now, there are multiple reasons for that. We have seen shortage in electronic chips leading to manufacturing and sourcing constraints. Of course, we have been dealing with this for the past 12 to 18 months, and that is likely to only get better as we go forward. But having said that, managing lead times, managing the waiting period from the customer's perspective is going to become very, very critical. The flip side to that is it is actually driving business in the pre-owned market, right? We are seeing more and more customers open to considering pre-owned vehicles as an option, right? Today, we are also getting younger and newer vehicles in the pre-owned market, some of them even with OE warranty, right? Today, we are seeing vehicles that are just 1, 2, 3 years old that are coming up for sale in the pre-owned market, right? So they have OE warranty till the 4th year. So that is actually becoming a selling point, right? People see that, okay, I can buy a pre-owned vehicle because it still has OE warranty, right? Now that is actually driving people to consider pre-owned vehicles too. Not only that, even in the upcountry and rural India markets, pre-owned vehicles, is becoming a lot more attractive. And that is going to be the trend for the next 2 to 3 years. We will see an upward take in pre-owned vehicles. Now, only 36% of this year's respondents said they are willing to purchase a four-wheeler online. That was 56% last year. This is a significant drop in people willing to purchase a vehicle online. Similarly, for two-wheelers as well, 60% had said they are willing to purchase a vehicle two-wheeler online last year, only 43% this year. Why do you think that there is a significant drop in this, right? Now, if you look at this particular slide to analyze the reasons, right? Convenience, right, is still number one when people are looking to purchase vehicles online. Better discounts, of course. People feel that buying a vehicle online, they are able to compare prices in a more transparent manner. They're going to get discounts, better deals. So that is also prompting people to still look at vehicle purchase online. Why would you not purchase a vehicle online? Now, this is an interesting one. With, like I said before, the need for touching and feeling a vehicle before they make a purchase is still one of the top factors, right? We had thought that, okay, people would have moved away from the need to physically go to a showroom and touch and feel. Surprisingly, that is still one of the biggest concerns. And this is also going to be a trend going forward. Now, OEMs are looking at a combination of online and offline model. So having an omni-channel presence, right? A good balance between your online presence and physical presence, the phygital, right, model is going to become more and more important as we move business towards upcountry and rural markets. Now, what would be the financing method, right? No surprises, 57% of the respondents said, nationalized banks. What is important is still 18% of the respondents said they are going to tap into their personal savings and liquidity, right? Like I said before, the long-lasting economic and financial impact of COVID-19, has made customers a little more conservative, I must say, right? They would rather look at their own savings, dip into their own savings and liquidity than take on a loan and pay interest. Whatever the interest rate may be, it's quite varied from bank to bank or institution to institution. But having said that, the propensity to first tap into your own finances is significantly more. Last year it was 14%, it has increased to 18%. right? And that is going to be the trend going forward as well. On the other hand, it's an opportunity for smaller private microfinance companies that have, let's say, a closer personal relationship with the customers, in smaller towns, in tier 2, tier 3 cities, to make it a little more flexible, and offer customized solutions, depending on their background, depending on their prepayment, payment capability, and so on. To make it, attractive for them as well. So I think that's an opportunity there that we can surely discuss about. Again, similar numbers here too. 24% here for two-wheelers, up from 20% last year, who are going to dip into their personal savings and liquidity. Towards the end of the deck, why would you not purchase the? Of course, that was also one of the questions we wanted to understand, right? 40% said they're happy with the current vehicle. They do not have a need to purchase a new vehicle. Fair enough, understood. 28% still say they have budget constraints. A small drop compared to last year. Last year it was 32%. Still, almost 1/3 of the respondents say they have budget constraints, right? And that is again something that we need to look at, whether it is going to drive people towards the pre-owned vehicle ownership, or if it is going to drive customers towards new business models, short-term leasing, subscription-based services, where they don't have to worry about down payment and then be burdened with the vehicle ownership over a period of 5, 6, 7 years. So budget constraints, are they going to drive new business models? Something we need to wait and see. Very similar numbers here, for two-wheelers as well. Budget constraints is still 26%, not very different from passenger cars here. When are you likely to purchase vehicles? Something that the OEMs and even the banking institutions are looking for. Something positive here, right? 36%, more than 1/3, are willing to buy a vehicle, are looking to buy, or intenders of a new vehicle purchase in the next year, in the next 12. So definitely positive here. That was only 25% last year, right? Only a quarter were looking to buy a vehicle in the next 12 months. But this time, when we did the survey, it's 36%. So that means it does look like, it is going to contribute to new vehicle sales growth as well in the next 12 months, in the next 12 to 18 months. So definitely a positive trend, something the OEMs across passenger cars and two-wheelers should be happy about. Now, two-wheelers is again even more. 41%, of the respondents last year said they are willing to purchase, but this year it is close to half. Close to 48% of the respondents said they are going to buy a vehicle in the next 12 months. So definitely good news, a positive sentiment for both passenger car OEMs and two-wheeler OEMs. So with that, I'm going to stop. I'm going to hand over back to Deepangshu, but a couple of points are very, very clear from this survey, as we also, the overall intent is positive. There has been a bit of an uptick in terms of the intent to purchase a new vehicle, or the propensity to purchase a vehicle. What we need to look at is to see how we can make it a little more affordable, either in terms of new business models, new finance schemes, or maybe with OEMs themselves getting into the pre-owned vehicle market. So definitely a lot of opportunities, for us to tap into, as we see more and more customers looking to buy a new vehicle in the next months. Thank you very much, gentlemen. Deepangshu, back to you.
Thank you, Kaushik, for sharing with us the findings of IACC 2022. And like you said, there are quite a few positive takeaways from the findings this year. I'd like to head to my first question for Shashank-san. Shashank-san, your first reactions to the findings this year. You were, of course, part of our IACC last year as well. And also, if you could give us a sense, what is the sense that you get from the ground, from your partners in the ground, and from the market? Shashank-san, you are on mute, please. You'll have to unmute yourself.
Yeah.
Thank you. Yeah.
I think the findings are more or less very much in line with what has been the reaction from our dealer partners, from our consumers whom we are in touch with very closely. But of course, we have to see it in the perspective that there are multiple factors which are affecting. So you would have seen, for example, a lot of the buyers shifting towards away from public transport and away from shared mobility towards personal mobility because of safety concerns. So that's clearly one thing. There is therefore the reason for buying based on utility and functionality that actually increased in the pandemic, and that seems to be also continuing even post. I won't say post the pandemic, but at least a little bit of dilution in the pandemic situation. So multiple factors work, and I think the thing which is important, I believe, is that we have to consider different segments differently. For example, what Kaushik showed in his presentation, in the survey presentation. When we look at disposable incomes, there are certain segments of people for whom disposable income has not really reduced, even though their overall incomes may have reduced. There is a segment of people for whom disposable income has disappeared. In some cases, the affordability ratios have changed dramatically, especially for the entry-level segment. So the need could be increasing, as we just discussed, but it varies from segment to segment. There is also that case where I think while the presentation, because it is meant for the general user, it has to be simple, but there are complicating factors. For example, you would have heard that there is the higher end, the higher variants of the different segments are selling more. That's true. But is it because the aspirational buying has increased, or is it because there is what we call the telescoping of demand, where the upper segment goes down to the lower segment, and when you go to a lower segment, you tend to buy the higher variant in that segment. For example, if you were flying Deepangshu in a private plane, and you now say, no, I will go by commercial flight, you are probably going to first class commercial rather than going into the economy of commercial. But for you, it will be a moving down from a private jet to a commercial. So we have to look at those combinations, and I think it's very clear. Of course, the analysis, I believe, can be even more detailed, and I'm sure Kaushik would be looking at the data. For example, first-time buyers have actually remained more or less similar, slight increase during the pandemic period. Replacement buying has come down dramatically, although the demand for used cars have gone up substantially. So there is a lot of factors which are at play, and I think when I look at this data, it more or less matches with what I get the feeling when we talk to customers and our dealers. But if you look at it in more details and segment-wise, then probably you can get more juice out of this very good survey, which was shown by Kaushik today.
Thank you, Shashank. Mr. Bali, I'll come to your observations of the findings. And also, when you look at some of the findings, such as when we talk about the vehicle purchase intent, increasing to about 79% among four-wheeler, respondents, and 76% for four-wheelers and 69% for two-wheelers. How do you assess this, and how do you see this changing or evolving for organizations like Axis Bank?
So clearly, we have seen the consumer confidence and sentiment improve. I mean, when we look at this year itself, what we were in Q1, Q2, and what we are in Q4, very, very strong sentiment as we look at closing this financial year. And that's the kind of momentum we are seeing there. And happy to see that getting corroborated in terms of intent on purchase, as you mentioned. Separately, when we also look at the other spending data of the customer, which we can access through their credit card spends also. So there's almost kind of a revenge buying or traveling or holidaying which is happening. So clearly the confidence is good. Interest rates have remained low. I think the only limiting factor has been the supply of new vehicles, but we've seen a very strong uptick on the used vehicles. That's also helped by the fact that now that market itself is getting more and more organized. I think it's moving into stronger, more reliable hands who give a warranty, so customer is happy to buy from them. Of course, all the post-COVID situation in terms of personal mobility, all that is a good sign. My sense is we will have no another surprise happening. I think next year the demand will be good. Finally, also a sense on, I think in the COVID last 24 odd months, we've seen a certain segment get better, a certain segment's disposable income get reduced. But I think that's getting evened out now. I think another 3 months of consistent economic growth, you will see that also getting evened out. And therefore, we do expect the market to be strong. Supply continues to be a limiting factor. And so we are very hopeful that the whole industry will see better times ahead. The only issue is on the supply side. I am not too sure how and when will that end, but certainly things have started looking up and consumer confidence is pretty strong.
Okay. Talking of consumer confidence, Mr. Vigneshwar, what are some of the key changes that you have noticed among your consumers, your customers, and how are dealerships really meeting the shifting consumer expectations?
First of all, congratulations on the study conducted, and it's nice to know this is 2 years in the running, and I think Frost and Sullivan has done a great job in terms of gauging what the customer wants. I have about 4 or 5 points as a takeaway from the study. Number one, personal mobility has actually been enhanced, and it has become more of a necessity right now from the point of view as safety as a concern. And another point would also be that being from the retailer side of things, I've also noticed a very important slide which actually talks about the increased trust in brick and mortar facilities. So, which is something which we've been talking about. And yes, when it comes to these uncertain situations, that's where customers also think about a face, a brand, and a presence, which is what dealerships give in every nook and corner of the country, from the largest of the metro cities to the smallest of the rural areas. So that's where, as dealerships, we can play a much bigger role in terms of increasing customer connect and making sure we also play into increasing customer requirements for their vehicles. I also noticed that a very important point has come out is the budgets being stressed for buying of vehicles. So all this actually, funnel into the fact that how the pre-owned vehicle segment can actually play a major part in satisfying the demands of the customer. The pre-owned vehicle segment is much larger than the new vehicle segment, whether it's two-wheelers or passenger cars in India. It's probably around 3 times more. So this is where we probably can look at pre-owned vehicles as a tool to bridge the supply constraint gaps which we are having right now. And also in terms of the cost of acquisition for the customer for a vehicle. And Maruti, being one of the largest manufacturers in India, have always been very, very strong with the pre-owned vehicles. And we are also seeing a lot of two-wheeler and for passenger car OEMs take to the same thinking, and they're also building on the pre-owned vehicle segment right now. So, and another thing also which has come out quite interesting would be that the vehicle ownership time of customers is increasing. That is also can be linked to the budget constraints and due to the disposable incomes coming down. So before the customer used to have the vehicle for let's say 3 years, now it's slightly increasing to 4.5 years. That is bound to change when things improve, when the pandemic era slowly tapers down to normalcy. And we are seeing more and more customers come inside our showrooms, but sometimes their buying decisions are a little bit longer. One of the reasons digitization has helped it make it shorter, but the last decision of retail is becoming slightly longer because of, again, budget constraints from the customers, the banks becoming a little bit more stringent in lending. So these are a few constraints which we have, and I'm sure Sumit is here, and Sumit is one of the largest players of in the sector for retail lending. So this is something which we probably look forward to some help from Sumit and his industry to make sure that the buying experience for the customer is much faster and the lending also happens quicker.
To that particular point, Mr. Bali, would you like to respond to Mr. Vigneshwar in terms of how can banks become more or offer more or easier lending for customers?
Last 2 years have been tough for everyone, including the banking industry. But as I said, now with customer confidence coming back, there are more innovative solutions. There is easy financing available. The job distribution, etc., is getting more wider. So clearly, I don't think finance will be a limiting point here. Certainly, it's an important point. And to give you a sense, I think in terms of financing, if you were to look at even say a loan worth say 4 lakh rupees, and we look at interest rate of going up by about 100 basis points, the difference in EMI is only about 200 rupees. So for a 4 lakh car purchase or loan, you're paying 7,200 more over the period of 36 months. That's not a big factor. The important thing is how consumer views his future source of income. That we see improving, and I do not see that financing will be a constraint. In fact, the market is hyper competitive, and which always means a good thing for the customers. And therefore, you'll see easy availability, better package schemes. Interest rates are likely to remain affordable and low. So overall, I think things are certainly looking up, and banks will be more than happy to help customers reach their aspiration of buying a car or a two-wheeler.
Right. Banwari, one interesting finding from the survey is about customers' preference for the brick and mortar model, right? And we have also seen in the survey how the willingness to purchase a vehicle online, both for four-wheelers and two-wheelers, have actually dropped significantly since the last year. What is your reading of the situation? How do you look at this sort of evolving in years to come?
Thanks, Deepangshu, for inviting me here. And I wanted to say that car wale, bike wale, CarTrade, we've been sitting on this data of gold mine for 10, 15 years. It's only second edition of the survey. So thank you, Deepangshu and Mobility Outlook, to bring this data out. Coming to your question, I see a couple of things here. One, of course, last year when we did this survey, the entire premise was pandemic as being the precursor. And since pandemic affected the mobility of people, or let's say their outlook in general to go out and experience stuff, they might have over-indexed importance of online. So that probably was a little higher than it should have been. And this year when they go out, let's say they are free, somebody just said the revenge in terms of going out, whether it is travel, whether it is, let's say, vacations, or I think that could be one which could be under-indexed this year. To me, of course, the world has shown us that this is going to change over a period of time, consistently, steadily, and online is going to play a role. Having said that, I don't intend to say here that people will come and buy cars online in entirety. Not going to happen, and probably shouldn't happen. Cars are very, very expensive purchases, even bikes expensive purchases for Indian consumer. There's going to be a model which would be end-to-end, online and offline. They'll merge in such seamless way that people will not even realize what were they doing offline and what they're doing online. It would seem like one channel, one pipe of a sort, wherein they enter from one end and they come out, let's say, buying that car or bike on the other one, having, let's say, interacted with multiple points across board. So to me, I see this as more like a indexation issue, more of a recency bias in people's head. Coming back to the brick and mortar, of course, people want to touch and feel being expensive products, whether it is new cars, whether it is used cars. Dealers are going to be here for eternity, I believe, and they should be here. And we believe that we should play a role, let's say, as OEMs, as aggregators, as information providers, bankers, insurance companies, to stitch this entire journey seamlessly. Used cars is going to see a sea change in next, let's say, 3 to 5 years. This industry, report we just published talked about how 14% is going to 20% this year in terms of To me, that's again a little under-indexed. Having if we were in a situation wherein the demand supply constraints didn't exist and new cars sold in the same exuberance, let's say, that they sold earlier, it might not have been as good perception-wise used car industry this year, but it would have grown much faster in the years to come. So when new car industry slumps, I fear the pain for the used car industry in the 5-10 years coming down. There have to be a lot many new cars to be sold before you can really believe that used car industry is going to grow. But then there's going to be thousands of crores of investments, which has already happened and happening, whether it is companies like ourselves and companies like, let's say, Maruti Suzuki, or let's say the OEMs and dealers. Everybody's talking about used cars. Trust is getting built. You'll see, if you're not seeing already, TV advertisements in the bulk, wherein people will talk about 7-day money back guarantee. Take the car, don't worry about it. Return it if you don't like in seven days. 1 year full warranty, free. So many, let's say, checkpoints, certified cars. This is going to become a norm much faster than I was in the US for the NADA show last week. And I can tell you, India on the used car space is running slightly faster. Of course, there are players there, but we are probably running slightly leapfrogging almost in what we are going to do technologically and the consumer confidence wise. Of course, we are far behind from the West. What they've done 30 years ago, from lemon laws to, let's say, building that confidence to consumer, we are not there, but we're going to leapfrog Deepangshu. So brick and mortar is going to play a role which is always happened, and then it will happen even better. But I wouldn't undermine online. They're going to go together in this.
Sure. I'll take that point to Shashank-san. In your whole, the customer process, you have already digitized 24 out of 26 touch points, if I get that number correct.
That's right.
Now the opportunity one on the digital side, that is one. And secondly, I'd also like your comment on the used car opportunity.
Yeah, so I think on both sides, the opportunities are really good. And we are seeing very hard evidence of both. So first we come to the digitization part. So if you look at our inquiries on the digital platform in 2016, it was roughly about 3% of our total inquiries used to come on the digital platform. So we strengthened that because we thought we had a trend, we watched that trend and it was increasing. So by the time it was March 2020, we were at about 15-16% of the inquiries coming on the digital platform. Then the lockdown happened. And in 3 months' time, actually, we went up to about 50% of the inquiries coming from the digital platform. It has come down a little bit now since the opening up of the business after the lockdown, the first lockdown. So I believe what took us 4 years to come from 3% to 15%, we could come from 15 to 40% today in a matter of few months. And that, I think, is an accelerated process which is not going to stop. It's irreversible. And that is the reason why, as you rightly mentioned, out of the 26 touch points in the customer journey, we have 24 which is digitized. Having said that, I must tell you there are 2 points which are probably not going to be digitized, which is the test drive itself. While you have those virtual AR, VR experiences where it doesn't give you the same feeling. Second, the delivery of the vehicle. And that is why, and remember in India, a car is actually a discretionary purchase. And it's economically probably the second largest value of item that you will buy in your lifetime after house. And that is the reason why consumers want the touch and feel of the product also. And even in very advanced countries, we have found that despite all the digitization, etc., people visit physically the showroom. In fact, in America, in US, the figure is 92%. People still visit the showroom to get the smell of the leather, or as they say, kicking the tire and so on and so forth. So we can only talk in auto terms in phygital. And I think both have both have their space. And digital, as I said, is going to expand, and that's a big opportunity. On your second question of used cars, used car market currently, maybe it's around 1.5, 1.6 times the new car market. There is an issue in terms of availability itself, which is slightly pulled down the actual trading of used cars last year. Because as Banwari ji was saying, that there has to be used cars coming into the market for it to be sold as to the used car buyer. So on the inquiry part, I see a big jump in the used car inquiries, about 16-17% even this year, which is pretty large. So it could become very large, and also the scrappage, which seems to be getting more and more bigger in terms of the implementation as we go along. You would find a big change and shift in the dynamics of the used car market. So one thing is clear: used car market will grow, and dramatically. Maybe not 3.0 times as I think Vigneshwar mentioned, but in some market it may be true. But it also in terms of the dynamics of pricing is going to change hugely. And I think it's going to be a very, very, very big market. And that's why Maruti Suzuki has spotted that trend much earlier. And today we are the largest player in the organized used car market. And we are continuously increasing. And remember, digitization and used car are not two different things. Digitization can be there in new car buying. It's also there in used car buying, whether in terms of pricing mechanisms, whether in terms of study of cars. But also remember one last point I wanted to make regarding the used car, that every used car is different, unlike a new car. And therefore, the reason why consumers will also need to see the vehicle in its entirety and check on the vehicle, and the market will shift therefore from unorganized market to the more organized market, because we have warranty, we have refurbishment, we have genuine parts, all those things. And that is where True Value from Maruti Suzuki has made a great effect on the consumers for this market.
Right. Mr. Vigneshwar, one question to you. Our survey also found that 36% among four-wheelers and 48% among two-wheelers were willing to actually make purchases in the next 1 year. So there's definitely a sure sort of shift in willingness to buy vehicles. Do you see that in reality in the kind of market that you operate in?
Today is not a question of demand, it's a question of supply. Okay. In most places, you always keep hearing any new vehicle gets booked at 4 months, 6 months, 1 year. It all tapers down to the fact of demand is very, very strong. We've been seeing very good walk-ins. Our conversion ratios from inquiry to booking is very, very strong. The biggest thing, constraint right now across industry, two-wheeler or the four-wheeler, would be the availability. Two-wheeler to less of an extent, we have a lot of stocks at dealerships, but four-wheelers definitely, there's a huge demand. And due to whatever factors, availability of spare parts, availability of raw materials, and the chips seem to be one of the biggest issues going around right now. We don't see the chip issue being solved in the next 6 to 8 months. Okay. So probably the pain would exist according to whatever manufacturers have told us for this year at least. Demand is strong. Supply is something which we probably hope for better.
Okay, gentlemen, Shashank-san has a hard stop at 12. So, Shashank-san, thank you so much. Truly appreciate you being part of this event. Appreciate your support. Thank you
very much. Thanks.
Thank you. Thank you, Shashank.
Kaushik, one final question before we wrap up the discussion today to you. I mean, what was a bit surprising in this survey was customers' willingness to purchase electric vehicles, which has remained constant at 33% for four-wheelers, although we have seen a marginal uptick in terms of two-wheeler preferences. How do you see this evolve? Because we have, of course, seen new manufacturers coming up. We have seen new products being brought to the market. There's, of course, more awareness about electric vehicles. What do you think has led to this sort of this remaining stable in the past 1 year?
Yeah, I mean, that's a very good question, Deepangshu. The way I look at it, of course, I'm not part of the manufacturing ecosystem itself or the e-mobility ecosystem, so I can look at it from an external perspective. The way I'm looking at it, and from my interactions, is that EVs are becoming more mainstream today, right? Let's say 5 years ago, 6 years ago, when you said EVs, they were always a different class of vehicle. They had low performance. They could only be driven for a few. They would never, have a top speed of more than 25, 30 kilometers per hour. So there were a lot of constraints or, boundary conditions, related to EVs. But today, they are becoming mainstream. They are, if not better, on par with conventional vehicles, right? Take the example of many of these new generation electric vehicles. So they are up there. So in people's minds, the positioning of EV itself is changing, is going up, right? From being a small marginal player to a mainstream competitor. So people are looking to replace their existing vehicles with an EV. A few years ago, an EV was an additional vehicle, was a third vehicle or a fourth vehicle, right? Today, people are considering EV as their first vehicle. So that itself shows that the product or the technology has improved significantly, and today it is on par with conventional IC engine vehicles, number one. Number two, again, the charging infrastructure, right? People are beginning to see, through articles, through government promotions and so on, that charging infrastructure will not be a stumbling block when it comes to ownership. People will see more and more public charging points. I mean, in India, as the Hindi phrase goes, "Jo dikhta hai, wo bikta hai," right? People need to see it. So as and when people see more and more of these, they will have more and more confidence to buy. So I think going forward, the potential for EVs in India is very, very good, not only from a fleet operator's perspective, but also from a private owner's perspective.
Wonderful. Thank you. Thank you, Kaushik. Gentlemen, we have completely run out of time for this edition of the IACC panel discussion. For participating in this panel discussion today and sharing your valuable insights, our most sincere gratitude. I would once again like to thank Axis Bank for powering IACC 2022 with their support, and also Frost Sullivan for acting as our validation partners. For gentlemen, thank you once again for participating. To all our delegates, appreciate you taking time. Unfortunately, because of the lack of time, we couldn't take any of your questions, but Shashank-san did respond to many of the questions that were posed in the Q&A box. I truly appreciate you taking time. Thank you so much.
Thank you, everyone.
Thank you.
Thank you.
Yes, bye.